So Verizon has had some mixed results lately, but they still have one of the better dividends out there, and they've been very consistent in paying it out. I'm going to review Verizon stock and see if they are actually worth a buy, hold, or a sell right now. They're set to report earnings on the 27th of April, but there are some positive signs here for estimates. They also are powering the 2026 FIFA World Cup. They also have some strategic fiber expansion efforts as well, which could be a long-term advantage. But market sentiment seems to be mixed in general right now. Now, they're actually down 9% in the past month, despite having an okay week, up almost 2%. Over the past year, they've had some strange results, but they are up 6.46%. Over the past 5 years, they are still down 20%. But again, this is a stock that I think most people just want to buy and hold for the dividend. Therefore, you're probably not expecting a lot of growth over time, but you still don't want it to be in the red either. Earnings wise, before the next one that's coming up, scheduled July 21st. As far as earnings go, the most recent ones we have on here were a 3.28% beat on EPS and revenue beat by 0.51%. Quarterly financials towards the end of 2025 were up 1.96%, although net income, diluted EPS, and net profit margin were down. I also like to compare them to the S&P 500, which is actually up 70.72% over the past 5 years. So generally, it's been a pretty strong market over the past 5 years. In comparison, over the past year, the S&P 500 is actually up 35%, and it's been generally positive lately, although it did kind of start off with a dip, as you can see, but this month things have been kind of turning around for the S&P 500. If you look at assets versus liabilities, you do see a decent ratio here. It could be better, but if you look at return on assets and return on capital, I would say those are a little bit low for my liking. I also like to look at the past 3 months just because that's the equivalent of a quarter, and they're actually up pretty well over the past 3 months. Although it doesn't seem like steady growth, it looks like it was mostly just in one big jump. Now, with earnings actually coming up, you do see a lot of buying behavior from customers. Hedge funds are actually buying up shares of Verizon lately as well, or at least after Q4. And they were at 81% buy, 19% sell at that point. Analysts don't really know what to do with them right now. They're pretty split between whether they're a buy or a hold. Out of 29 ratings, 41% are saying it's a buy, and about 52% are saying hold, while the other 7% or so are saying it's a sell. If you look at how they've done on their reports, they've been pretty steady. They've never really raised their guidance by much because, I mean, they're mostly considered a high dividend stock, so that's going to eat into their growth, hence why they don't have major guidance increases over time. If you look at their forward PEG, it's actually pretty solid at 1.19. That's a really good score and gives us a nice alternative to a PE ratio, which their PE ratio is at 11.33, which is actually quite low as well, especially in this market. Yet another alternative to a PEG or a PE ratio is the EV to EBITDA ratio, and this doesn't look too bad either. It's at a 7.5, which is pretty low, and usually lower is better in this area. They do say they're worse than 51.52% of 330 companies in the same industry, but I look more at the overall score and kind of compare it to a few of the others like the PE and the PEG. Now, if you look at their snapshot and what is basically the best way we can figure out whether they have good leadership or not, what are employees saying about the culture here? 3.7 out of 5 star rating overall for what it's like to work here is pretty good. 64% recommend working here to a friend. That's good. But for some reason, only 26% approve of the CEO. It's kind of rare that you see solid reviews, but then really bad CEO reviews on the same company. So it looks like a lot of people are giving Dan Schulman a low rating, most at Verizon specifically because of an aggressive, large-scale workforce reduction, as well as blunt leadership style and a lot of restructuring, cost-cutting, and AI adoption. So it looks like they've had some massive layoffs, over 13,000, with an intense focus on AI, which of course is becoming more and more of the norm these days. Now, another thing to keep in mind here, if you are interested in Verizon stock, you might want to look at the allocation of your portfolio. This is one reason why I can't tell you whether it should be a buy, hold, or sell for you individually, because I don't know your situation. And obviously, I'm not a certified financial advisor either, so legally I can't do that. But also, when I'm making these decisions, I like to look at the GICS sector of a company and make sure I don't have too much in that sector before I buy, even if I like the stock a lot. So they are actually in the communication services, GICS sector. So that's just one thing to keep in mind when deciding whether Verizon fits your allocation or not. Overall, I think for a dividend stock, Verizon looks pretty good. Although, if I was looking at something where I was wanting to invest long term, I don't think I would get Verizon. Like for me, I'm still investing long term for growth. I don't really see myself being interested in Verizon right now. But if I was at an age where I was ready to retire early or something like that, I would really look at that 6.15% dividend yield and really consider whether or not it'd be worth it. Now, obviously, they're down over the past 5 years, but they are showing maybe some signs of turning that around. We'll see what their next report shows, but I would say maybe a better comparison for something like this, rather than the S&P 500, is if you're looking at something like Verizon, you're probably looking at this more like you need the income now, but you don't want to sell. So you want something that pays dividends for maybe retirement. So if that's the case, I would compare them more to SCHD, which I think is the closest thing to the gold standard for dividend ETFs. If you look how SCHD has been doing, they're actually up almost 22% in the past year, up 24% in the past 5 years. And although they don't show it on Google Finance, they do seem to have about a 3.41% dividend yield. So the dividend yield is like half of what Verizon gives you, but you are still maintaining a little bit better growth over time. So it really just depends on, do you believe Verizon's going to keep growing? Was this more just a spike and a one-off thing? Because it doesn't look like it's continuous. And of course, we'll have to see how their revenue numbers look and everything as well. So I would not look at Verizon as a buy for a growth portfolio. For retirement or something like that, I could see them being a hold or possibly a buy, or at least a portion of the portfolio. It's probably too early to say they would be a sell. Again, unless you are just really trying to get more growth or more of a combination of growth and dividends rather than just a dividend with almost no growth. Again, none of this is financial advice. Hopefully this was helpful, and I'll see you in the next video.